The S&P 500 rallied for its ninth time in the last 10 trading sessions and closed at yet another all-time high. The Dow Jones Industrial Average was right there with it. However, as we look underneath the hood, there are some signs of concern out there. Not that it has to be trend changing, but nonetheless, perhaps time for a bit of a breather within the markets. We'll talk about market breadth here today. We'll also talk about some of the stocks that are affecting trading through their earnings reports, both earlier in today's session and then also in the afternoon or after hours session here today on Tuesday evening. We'll take a look at all of our postures to see if we're on the right track, and then we'll look at a trade application example at the end of the video where I wanted to concentrate on a country outside of the United States that appears to be setting up as a bullish bounce candidate. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 26th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down into our description area. Be sure that you're signed up for our email distribution list, so that way you can be informed whenever we post these Market Outlook videos. By the way, David should be back from his trip tomorrow, so as long as his travel plans are going okay, he should be back in the saddle for the Market Outlook tomorrow as well, so we'll all look forward to hearing from him. In addition to the YouTube channel, you can also follow us on Twitter. My handle is @BrandonVanZee. We really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trading activity. I kind of wanted to start with this view here. We're on the Visualize tab, and we're looking at the S&P 500 public watch list here on the Thinkorswim platform. Just wanted to first point out that despite us hitting an all-time high today and closing at an all-time high today on the S&P 500, things weren't quite as rosy as they might have seen at first blush. You can see that the advancers actually trailed the decliners here today. So I think most people would assume that if the S&P 500 was up, there were more stocks that were up than down. But today was one of those oddball days where we actually had more falling stocks than rising stocks. So some of you might be wondering, well, how is the S&P 500 up then? Of course, you have to remind yourself that the S&P 500 is a market cap weighted index, and therefore the larger companies have a bigger influence on the overall performance of that particular index. That's telling us that the generals perhaps are leading the way here today, but the army is having a hard time behind the generals keeping up, and therefore there might be a little bit of disconnect, or discontent, I should say, within the army, and therefore we might need a little bit of a cool-off period after having gone up 9 out of the last 10 days. Back on over here now to the charts, and you can see that the S&P 500 was up 0.18% today. You will notice that another sign that perhaps this rally is getting a little bit long in the tooth, at least here in the short term, is the fact that we have some long upper shadows on our candles here today. So notice where you have that thin line above the body. If I were to right click and go to maximize sell here real quick, you can see this a little bit better, where the body is basically showing you the difference between the open and the close, but the wick on the top and the wick on the bottom are showing you the moves in between at the highs and the lows of the session. And so when you have a long upper shadow like this, sometimes it's an indication that the bulls have had enough. They've felt pretty good about the rally that they've had here recently, and they were willing to sell off their holdings now that they've made a pretty decent amount of money on them. We'll see. Obviously, you do need confirmation of this the very next day, particularly in a situation like we're in right now, where we are in the thick of earnings season right here, right now. And speaking of which, maybe we can go through a few of those movers. Perhaps we'll start with the stocks that had moved the most here earlier today. So let me pop back on over from our index watch to our heat map. And you can kind of see some of the biggest movers as of today's close. This does not include anything that would have happened after hours. This will give you a sense of what has moved very nicely here today. And there's quite a few very obvious things that stand out. One of our top-down trend trading holdings for my premium students is NVIDIA. That was one of the leading stocks in the market today, which is up 6.7%. And then a stock that we've purchased over the years in my dividend growth investing class, which is United Parcel Service, or UPS, was up about 7% today to lead the market. Of course, those are important players. They might not be as splashy of names as something like Tesla or Apple or Microsoft. Nonetheless, they are important in their own industries. And so great to see UPS rallying hard and also NVIDIA rallying hard today. On the other hand, you do have a couple of red boxes that stand out like a sore thumb as well. Here's Lockheed Martin, which is a name that a lot of dividend-oriented investors know. We didn't cover it here today in my dividend growth investing class, but we did cover one of its competitors in the defense contracting space. We actually compared that defense contractor to another industrials company that I've never covered in the 7+ years that I've been teaching dividend classes, and the class ended up voting for that alternative. So that was a little bit of a surprise, a brand new stock for our dividend growth investing portfolio that we've never reviewed in our history. And that's certainly rare at a time when the S&P 500 is hitting an all-time high. Remember, when the S&P 500 goes down, most stocks go down within it, and dividend yields go up. Those are moments where purchasing new merchandise is a little bit more likely, but it's fairly rare in a case like this where the S&P 500 is at all-time highs. Dividend yields are very low, but we found kind of a hidden gem, you might say, in our dividend growth investing class today. But that is one area that did get roughed up a little bit more. The industrials really got hit from that Lockheed Martin news. They were down about 12% when it was all said and done. And then, of course, another one that stands out to my eye is right up here with Facebook. It was down nearly 4% today. And remember, Facebook is a very influential company, not only within the S&P 500, but also, importantly, within the communication services sector. And so communication services all of a sudden is looking a little bit more ugly from a chart perspective. We'll take a look at that a little bit later. So that kind of gives you a lay of the land as far as some of the big market movers within today's normal session. Let's take a look at what's happening after hours here this evening. Number of companies hitting the radar of a lot of traders after hours, because we are in the heart of earnings season right here, right now. I've got Twitter pulled up already, so let's talk about that one first. They did report their earnings after hours here today. Probably wasn't actually earnings. It was a lack thereof. They lost 54 cents. Looks like they missed the analyst expectations as well. However, the stock is up about $2 after hours. Perhaps it didn't deserve to go down in sympathy with Facebook during the normal session and is kind of making up for that move a little bit after hours here. So that's Twitter. Another stock that reported this afternoon is Robinhood, of course, one of the more recent IPOs within the market here. And you can see that Robinhood is really taking it on the chin right now. It closed the normal session at $39.57. It's currently trading at around $36 here after hours, so you're down about $3.50. It's a big percentage move right there, as the stock or this company did lose $2.06 per share, as this is a up-and-coming company. It's not yet profitable. So those that are holding shares in Robinhood are going to feel a little bit of pain tomorrow. Let's take a look at a more well-known company, Microsoft. This is a company that we currently own in my top-down trend trading class, and we also had the good fortune to buy many years ago in my dividend growth investing class, and in that particular case, we've octupled our money, which is a very rare thing to say in the dividend growth investing world, but Microsoft was certainly an exceptional opportunity for us over those years. Anyway, Microsoft did report their earnings this afternoon after the bell, Initially, we had a big push higher all the way up here to 316, but it does look like it's sold off here in the last half an hour or so, and we're back basically to right where we ended the session. So we went from 310 up to 316, all the way back to 310, and so it's almost as if earnings didn't happen, but it was actually quite a very good earnings hit that they made there. They came in at $2.27. Analyst expectations were only $2.05, so they easily beat the analyst expectations there. Microsoft has been a beast of a company, continues to be a beast of a company, one of the few trillion-dollar companies out there. Of course, yesterday the news was all about Elon Musk and Tesla becoming one of those trillion-dollar companies out there. Let's take a look at Google, or some of you might refer to it as Alphabet. But they reported their earnings this afternoon as well. Not a lot of movement on that one either, quite frankly. You did have an initial movement lower. This is another one of our top-down trend trading holdings here. This one's actually one of our coffee can stocks, meaning that we've more than doubled our money in it, and we've sold half of our position and are playing with the house's money on the rest. But this stock had done really well since the lows of the pandemic back in March of 2020, but it's kind of stalled out here more recently and has just kind of been, keeping its head underneath 3,000, where the 52-week high is at 2,900 at this point. And you can see that's kind of the same general direction we're trading after hours here. We're not getting that big pop higher out of Alphabet. They came in at $27.99. Analyst expectations were just above $23. So they beat analyst expectations by over $4 per share. Nice healthy beat there for Alphabet, but of course people have very high expectations out of a company like this. So the stock is trading down just a little bit, but not an exaggerated movement by any means. Texas Instruments, on the other hand, is getting hit after hours. This is another one like Microsoft that's a rare dividend growth investment that we've made over the years, and fortunately the stock has gone up tremendously over the years, but this afternoon not doing you any favors. You can see the stock did close at about $197 and is trading at just under $190, closer to $189 right now. So that's a pretty healthy give back there in Texas Instruments, but you were able to easily get this with over 3% yields in the past, and right now as it's gone up to all-time highs, you don't have much of a yield there compared to where it used to be. So this one might need to spend a little bit of time in the penalty box there, and it looks like tomorrow is going to be a rough day for Texas Instrument shareholders. Another stock that reported earnings here tonight was Visa. Visa is also down after hours. You can see it closed at $231. It's trading closer to $223 right now, so down about $8 per share or thereabouts. One thing that did catch my eye as somebody who's interested in dividends is Visa did increase their dividend by 17% here after hours. Now, this is a pretty pathetic yield, so unlike Microsoft and Texas Instruments, where we are able to buy it with yields of over 3%, Visa has never come anywhere close to having one of those juicier yields. It's always been known as a low-yielding but high dividend growth company. So it would have to fall pretty tremendously before it would become a juicy yield. Nonetheless, it is a sign of health for the company when they are increasing the dividend by that much. Remember, 17% is a big move. My wheelhouse of expectations for typical blue chip companies is between 5 and 10%. So 17% is kind of shooting the lights out when it comes to dividend growth there. But looks like their stock is going to take it on the chin here tomorrow, down about $8 per share after hours as it stands right now. Their earnings were coming in at $1.62, which actually beat the analyst expectations by about 10 cents. And then last, let's take a look at AMD, another big, well-known tech-oriented company. And you can see that it is trading just slightly lower after hours. It closed at 122.93. It's trading closer to 122 even right now. So down less than $1 here as we speak. So obviously a muted response. Remember, this MMM that you see up at the top of your Thinkorswim platform gives you a general sense as to how big of a move you think the stock will go after earnings based upon the market maker move when they're kind of evaluating the put and call contracts, determining where the expectations are on either side. So when a stock only drops less than $1 and it was expected to move $8 either up or down, this is a very quiet response to earnings for AMD. Their earnings did come in at 73 cents. The estimates were only for 61 cents. So it seems like for the most part, a lot of those names did beat analyst expectations, but a lot of those stock prices probably already had that baked into the cake, so to speak, with this big rally that the market's been on for the last couple of weeks. So more of these than not are giving back gains here in the after hours session today. And therefore, there's a chance that the market might end up being down a little bit here tomorrow as we kick things off. But remember, there'll be another slew of earnings that will come out in the morning as well that could impact things from that perspective as well. Let's get back on track here with some additional analysis. Just a reminder of where we stand right now with all of the postures on the 4 major U.S. equity indices. We do still have strongly bullish postures. You can see that easily by looking at the dark green background colors of all 4 charts right now. And in all 4 of the cases, notice that the green line is in the upper reversal zone. Even on the NASDAQ, remember in recent weeks, the NASDAQ had been lagging, but even its green line has emerged into the upper reversal zone above 80 right now. It's at 86.10 and rising. So a nice big catch-up move that the NASDAQ has made here more recently. Also note that the NASDAQ now has a green moving average as a 30-day moving average, and when it's green, it means that price is above a rising moving average. It's hard to identify with the naked eye there, but this is computer programmed to make sure it's comparing the moving average number today compared to yesterday. So unless there's some sort of coding glitch, which I don't think there is, then that's going to kind of help you identify that. And the path of least resistance tends to be to the upside when you do have those green moving averages there. One thing I did want to point out about the NASDAQ here today, notice it was up, so it was up 0.06% today. It did have a bit of a long upper shadow similar to the S&P 500, but one thing did catch my eye. Boy, you got so close to breaking to a new high there on the NASDAQ composite, but you just couldn't get there. A little bit of a rejection there. I kind of feel like a Dikembe Mutombo finger wag is in order there as the NASDAQ was going strong to the board. And you can see that the high on the NASDAQ back here on September 7th was 15,403. Now that's the NASDAQ composite there. Today's high was 15,384. So we were only about 15 to 20 points away from breaking to a new high before it was rejected, and we ended up closing in the lower half of the range here today. Notice that the NASDAQ actually had a big range in its own right. Take a look at this label here that's talking about the daily range versus the average true range. Notice that it is the only one that is orange. All of these others are this light blue color. Think of the light blue as ice or cold. Think of the orange as red hot like fire. In other words, we had more extreme movement out of the NASDAQ today than what we had been seeing recently, whereas the other indices were a little bit more pedestrian in terms of their movements. Just to put a ribbon on it, just be aware that the S&P 500 was up 0.18% today. Dow Jones was up 0.04% today. And you will notice that the Dow Jones, like like the S&P 500, did manage to hit an all-time high. Both of those have green moving averages and strongly bullish intermediate postures according to the market forecast. Now let's talk about the Russell 2000 because it seemed to be a bit of a laggard here today. Notice it was down 0.72% today. It's kind of an ugly looking candle right there as well. Yes, it's true that we did hit a new high, at least on a multi-month basis. Let me just double check here. I want to see if this is an all-time high. Not quite, no. We're still working towards where we were trading back in March. But at least on the 3-month view that we're looking at traditionally during this part of the presentation, we can say that we're at 3-month highs as of today at its peak. However, we did sell off and we closed lower. We nearly engulfed the prior candle. That's not a very good sign there either. But what I would point out is that we now have what's known as a bullish intermediate confirmation signal. Remember, that exists when the green line is considered to be bullish, which it is right now in the upper reversal zone. And then at the same time that that's happening, the red line is in the lower reversal zone. And of course, that is the case right now as well. There's a couple of ways to help identify that and in terms of whether it's a stronger signal or a weaker signal. And what we like to see is when the red line falls into the lower reversal zone but does not go below 5. So we can check that off, and we know that that is acceptable in this case with the momentum number at 5. So in other words, we'd like to see it between 5 and 20. 9 is clearly between those numbers. But the other thing that we like to look out for is where is the blue near-term line. And in this case, it's at 68. Generally speaking, we'd like to see that blue near-term line between 20 and 50. That gives us a sense of a healthier pullback. Remember that the bullish intermediate confirmation signal is effectively a buy the dip signal. Now it's true, you did dip today in the in the Russell 2000, but it just wasn't an aggressive dip, right? It's only a 1-day dip in this case. And so if you had a 2 or a 3-day dip, that's when the chances are a little bit higher that the blue line could be pushed lower as well. And that's not where we're at right now. So it's kind of hard to get excited about a buy the dip trade signal on a day when your index actually hit a 3-month high, right? Sure, it did it in the morning and sold off by the end of the day, but still, a lot of times you'd like to see a little bit more of a give back before getting excited about a signal like that. So anyway, fairly pedestrian day for the large cap indices. The small cap index had somewhat of a bad day, and then as you look under the hood, as we saw there with market breadth earlier, it seemed like there were actually more stocks down today than were up. So that combined with the knowledge of the long upper shadows that we see here on the charts tells us that this move might be getting a little bit long in the tooth, and we might need a little bit of give back here before we can kind of rev our engines and head towards the end of the year in the traditionally strong seasonal period there in the holiday time period. Let's go ahead and take a peek over here at the on the internet real quick. I always like to get a chance to say thank you to those of you that help support this project of the Market Outlook video. Remember, it is a 100% free product for you, and it is a 100% volunteer effort on the part of David and I. So in order for us to be convinced that it's worth our 3 hours of the day that we have to set aside to do the research and the recording and the editing and the sending out of the emails and notifications and social media and writing up of the paragraph up above here, all that takes a lot of time. In order for us to justify taking 3 hours out of our day as busy business owners, we just merely need your support. We're not asking for your wallet. We are simply asking for your support. And how you can support us is by taking 5 seconds out of your day to click like for us there on Twitter. And since I did the video on Thursday, 100 of you came out of the woodwork to do exactly that for us. As long as we're in triple digits, I have no problem doing the video. If we start getting below triple digits, then I start questioning whether it's really worth it to do these as often as we do. So keep up the good effort on your side of the equation, and we'll do our best on our side as well. Earlier today, as I mentioned, I taught my dividend growth investing class. So for those of you that are premium and plus members, you're welcome to check out that recording up here on our Trading Rooms calendar. And then tomorrow, I'll be back in the saddle at 11 a.m. Eastern Time for my factor-based swing trading class. And then, yes, David is back, and he will be teaching his options inventory class at 2 p.m. Eastern Time tomorrow afternoon. So we all hope that he had a wonderful trip. All right, let's go ahead and take a look here at our sector selector now. A reminder that this gets done over the weekend, so it is a couple of days stale at this point, but nonetheless can give us some good information to sink our teeth into. So once again, we did have energy and financials leading the way from a sector perspective. They remain number 1 and number 2 for a lot of the same reasons that they've been number 1 and number 2 for the last month, which is oil prices continue to go up and interest rates on the whole continue to benefit the banks and things like that. Rounding out the top 4, we did have real estate and materials. Real estate had been in the top 4 for quite some time, as you kind of track backwards with that purple ball there. But the materials is somewhat new. The last 2 weeks, they've made their way into the top 4. But prior to that, they had been kind of a middling type of a sector there. Now, keep in mind, this is based off of an equal weighted philosophy here. So it is not the traditional market cap weighted version. So in this scoring system that I'm using here, every stock has an equal weight compared to one another, as opposed to saying Apple is way more influential than a smaller technology company. So from that perspective, it gives us a better sense as to whether the army is participating or is it just the generals that are participating. And so in this case, you can see that the army within materials has started to make a decent movement over the last several weeks. On the flip side of that conversation, notice the big tumble that communication services has had. Now, part of that is Facebook, but remember, Facebook is equally as important to all of the other communication stocks that I'm ranking in this system. So while that's the storyline, what this is also telling us is it's not just Facebook. There are other communication services stocks that are really starting to break down right now. We talked about Snapchat last week as just another example of another social media company that's been struggling. So there's been a lot of turmoil there in communication services, and that's really showing up here on the sector selector all of a sudden. So those might be areas where bearish trades would be in store for those of you that are trading. And then up on the top with energy and financials, hopefully there's still some good opportunities there. We did buy another financial company in my top-down trend trading class just yesterday. So there's still plenty of good-looking charts amongst the financials. Let's get back on track with some more Thinkorswim analysis now. And let's go ahead and take a quick peek here at our 3 green arrows chart. I'm assuming we probably have 3 green arrows on most of these, but until we actually see it, we won't know for certain. Yeah, we're still at 3 green arrows on all 4 of these charts. So not going to spend a lot of time on that. That's the assumption. Markets have continued to work their way higher, and therefore the 3 green arrow signals that existed last week continue to exist this week with, of course, the S&P 500, the Dow Jones Industrial Average, both hitting those yearly high tags right there. And with the Russell 2000, it's chiming in with a multi-month, yet not a yearly high. Nonetheless, a pretty strong move there at the beginning of today's session, and then, as I mentioned before, sold off to end the day near the lows, by the way, on the Russell 2000 right there. Let's do some 12 grid analysis now, and let's start with chart 5A, a reminder that the background colors of these charts will tell us whether we have a bullish posture or a bearish posture according to the market forecast technical indicator and its intermediate posture in particular. So the 2 charts right here in the middle, of course, stand out as dark pink, and that is a signal that those are strongly bearish intermediate postures, and they represent foreign bonds right here on the left, and then high yield bonds, aka junk bonds, right here on the right. Now, a lot of times you see this middle rung, at least the 3 here in the middle rung towards the left, kind of sharing the same posture because they're all bonds, right? In this case, it's U.S. long-term government bonds. We do have the foreign bonds that I mentioned before and the high yield bonds right there. So a lot of times they have the same posture. Right now is one of those rare times where that's not the case, The long-term U.S. Treasury bonds actually have a weekly bullish posture at this moment in time, as they've had enough oomph here in the last few sessions to get that green intermediate line above the lower reversal zone. Notice that their reading right now is at 21. The lower reversal zone is at 20. So they just barely managed to get up and over there. However, I don't think it looks all that appealing quite yet, because you still are faced with the same difficult circumstances that you were faced with about a week and a half ago as you were approaching this downward trending 30-day moving average. You're still there right now. And so my assumption, until proven otherwise, is that that will represent an area of resistance. And so while the posture has benefited more recently, I don't think the trend has changed yet. So be a little bit more cautious around long-term U.S. Treasuries there. We have had 3 straight down moves in interest rates themselves. Remember, when interest rates go lower, bond prices tend to go higher. And so you can see here that all of our bonds were actually up today, despite 2 out of the 3 still having a bearish posture. And they were up today because interest rates were down for the 3rd straight session here. However, we also talked about this 3-day in a row move lower in interest rates back here, and that was quickly unwound in just the next 4 days. So could it happen again? Certainly possible. You're kind of carving out a series of higher highs and higher lows there with interest rates. So we did close at 1.61% on the 10-year Treasury yield today. We did see the U.S. dollar make a move. Now, this was something that I discussed with you guys last week. I said for those of you that were feeling a little bit more ambitious, this might be an interesting setup to take a bullish trade on the U.S. dollar. Remember, at that time, we were sitting right on the moving average. And I think at the time we actually had a weekly bearish posture. So that's why I said you had to be a little bit brave to do it. But for those of you that might have decided to go that direction, you're thankful of that right now. We've actually had a pretty nice move up and off of that rising 30-day moving average. That background color has now turned to dark green, telling us that we now have a strongly bullish posture on the U.S. dollar. Remember, all else being equal, if the U.S. dollar is strong, commodities, particularly gold, tend to be weak, and that is what we saw today. U.S. dollar up, gold was down 0.74%. Now, with gold being down today, it wasn't down enough to change its posture back to bearish. You've had a really strong move out of gold here in the last couple of weeks, but kind of what I see with this chart right now is that you still have 3 well-defined zones up on top here. You have zone number 1, zone number 2, and this recent one that was just put in the last couple of days as zone number 3 here. And all of those are consecutively lower. At the same time, you have basically an equal low down here that was highlighted by that oversold cluster signal here on September 29th. We do continue to have a falling 30-day moving average. Notice the tip is yellow. Price is above a falling moving average in this case. That's what that represents. And so right now, I don't know if I want to be aggressively bullish on gold. You might be able to get away with doing some credit spreads or what have you. But right now, I still think you've got a lot of work to do before you see a mega trend establish itself. Right now, this could very well end up being a good environment for another iron condor on gold. Remember, we had one of those going last option cycle. It did expire max gain for us here in October. But if this falls a little bit more, let's say gold falls down to its 30-day moving average here, that would be about dead in the middle of this range from high to low over the last 3 months. That could very well be a nice time to put on another iron condor on gold. As mentioned in the earlier in the session, oil actually bucked that trend of the commodities. Commodities generally were lower today along with a rising U.S. dollar, but oil kind of is marching to its own tune here more recently, and it just seems like it is on a freight train higher. This week, by the way, represents an important one for those of you that might be interested in dividend growth stocks. ExxonMobil will be reporting earnings later this week, and it's their last chance to raise their dividend before getting kicked off of the CCC spreadsheet and also the Dividend Aristocrat list, because they basically maintain their dividend for several quarters in a row. So this is their last chance. So I, for one, am hoping they raise their dividend by even a penny. It doesn't have to be a big deal. Just anything will do. Otherwise, if they keep the dividend at the same rate like they have the last several quarters, they will likely no longer be known as an aristocrat like their partner in crime Chevron is. So anyway, keep that on your radar for later this week if you are interested in dividend-related oil stocks. But oil itself did have a good move today. It was up over 1%, and as you can see, it's at multi-month highs, or at least near that at this moment in time. All of our areas of stocks around the world, whether it's U.S., whether it's foreign developed, or whether it's foreign emerging, do have strongly bullish postures right now. However, be aware that EEM, which represents the emerging foreign stocks, did struggle here a bit today. It was down about 0.5% when it was all said and done, whereas those other two indices were just above the break-even line to the positive side of the equation. Let's take a look now at some sector analysis with chart 5C here in this case. Now you can see that the only red chart on the board is up here at the top. This is communications. And as I mentioned before when we were looking at the sector selector, remember the communications sector has fallen tremendously on an equal weighted basis according to the sector selector. Now we can confirm with our own eyes that it is also falling on a market cap weighted basis. And that shouldn't be a huge surprise. Again, Facebook was one of the worst performers today, and it is the most important communications company, or at least one of the two most important up there alongside Alphabet. So anyway, that chart looks a little bit uglier there today. Notice that the only other sector from a market cap weighted basis that was down today was industrials. Again, going back to what I'd mentioned previously about Lockheed Martin, but industrials were down 0.62% here today, although they do remain bullish from an intermediate time period perspective. However, all the other charts have positive performances here today. I wanted to compare that then to what we use in my Monday top-down trend trading class, which is this chart here, 1G, which is the equal weight sectors 12 grid. Remember, what we're looking at right now back behind there is the market cap weighted. So let's now compare that to the equal weighted. And I wanted to point out something that caught my eye, which is the equal weighted version of the S&P 500 was down today. Now that, again, knowing what we know now about the breadth that I showed you at the beginning of this presentation should make sense. The S&P 500 itself was up, but an equal weight version of the S&P 500 was actually down today because there were more stocks down within the S&P 500 than up. And that does carry on over to the sectors themselves as well. Remember what I said just a moment ago, that only communications and industrials were down from a market cap weighted perspective. We'll take a look here at the equal weighted versions, and they're not alone. Financials were down today. Communications on an equal weighted basis were also down. Technology was down today. Consumer discretionary was down today. Industrials were also down today, so remember those were the two that were down from a market cap weighted basis as well, industrials, communications. So both of those were down in both the market cap weighted and the equal weighted version. So just wanted to point that out because sometimes you got to do a little bit of extra digging to actually find out what happened within the market that day. And sometimes when you're looking at the market cap weighted versions of it like we traditionally do, it might not be telling you the full story. Another thing that I wanted to point out that did catch my eye here with the market cap weighted ones today, and this is something I've been talking about the last couple of weeks, the impact on XLY of Tesla, Amazon, and Home Depot. We'll take a look at XLY here. I'll even right-click and maximize that chart. And you can see this really long upper shadow on XLY here. So remember, we had one that wasn't nearly as exaggerated on the S&P 500 itself, but this is a pretty dramatic long upper shadow that we're seeing here on XLY, the market cap weighted version of consumer discretionary. So you might be wondering, well, what's causing that? And if you've been listening to the presentations, then you'll know what's likely causing that, and that is ticker symbol Tesla, right? Tesla itself has just been ramping tremendously. In fact, I had heard this morning an interesting statistic that said that yesterday alone, Tesla increased 2 entire Ford Motor Companies, if you can believe it. So if you would add Ford Motor Company on top of itself, that was a one single day move in Tesla, this candle here that we saw. So truly epic moves that Tesla has been making here recently. But today, that seemed to come to a screeching halt. They slammed on the brakes of that electric car maker. And you can see that we ended up with a red candle on Tesla with that long upper shadow there. And so without a doubt, that was the driver, pardon the pun, of the XLY chart as well, and why it looks the way that it does. So be a little bit more cautious around XLY. Yes, it's been a tremendous mover, and yes, it's breaking out to the upside, but stocks don't go up forever. And this has been one of the more extraordinary moves we've seen here recently. So you might need a little bit of a cooling off period here in some of those stocks that got a little bit too hot. All right, let's go ahead and get into our trade application example now. And for that, I wanted to come over here to chart 3A, which is our swing trading chart that I use for my class tomorrow morning, my swing trading class. And I wanted to pull up ticker symbol EPI. Now, for those of you not familiar with this, first of all, it's not a stock. It's an ETF, an exchange-traded fund that tracks stocks from India. And there are going to be dozens, if not hundreds, of Indian stocks within this one ticker symbol, EPI. But what caught my eye with it here today was that it finally seems to be catching a bit of a bounce. Remember, the S&P 500 has been up for 9 out of the last 10 trading sessions. Meanwhile, India has actually sold off. They had a 5-day losing streak there that ended today. 1, 2, 3, 4, 5. Today was the first up day we've had over the past week. Now, prior to that, India was in a strong upward move. One of the things that you might recall about the time when the S&P 500 was struggling back here in September, India kept on chugging along to the upside as though it had no cares in the world. And so that's a sign of a leadership market right there. Remember that this dotted gold line down below here will represent the pathway of the S&P 500 over the last 3 months of this chart. So while the S&P 500 right now is higher than where it was back here, naturally we're at all-time highs today, this period right here shows us where the S&P 500 was struggling during the month of September. Notice that during that time, it's not like India was ripping tremendously to the upside, but it was tilted higher at that time. And so now that the S&P 500 is trying to play a little bit of catch up to India, India has been falling at a time when the S&P 500 has gone up, and now it looks like the S&P 500 is getting a little bit toppy for the near term right now. Perhaps money will move back towards something like India that was working a little bit better now that it's kind of burned off some of its own fat there. So I like the way that it kind of fell down to this 30-day moving average, caught a support bounce there, and vastly outperformed today. Remember, EEM was down 0.5%. India is part of EEM. So not only did it outperform the S&P 500, but importantly, it outperformed all of its emerging market peers here today as well. You also have a bit of a bullish divergent signal on the near-term line. Remember, in this swing trading chart, we use the emphasis of the near-term line, or the blue line on the market forecast technical indicator. Notice that you have this trough number 1 right here in that blue line on October 20th. You have trough number 2 yesterday on October 25th. In other words, you had a higher low in the blue near-term line. At the exact same time, you had reduced prices from right here to right here. So in other words, price was falling. So anybody who's just picking up a paper, the Wall Street Journal or what have you, and just looking purely at price and nothing else is assuming India is struggling right now. Whereas our indicator down below is telling us, hey, this stock could be setting up, or this ETF could be setting up for a little bit of a bounce here. The indicator of the market forecast is giving us that heads up in this particular case. So what I ended up doing was just simply a bullish swing trade on it. You can see the levels that I've got set for our upside price target here and our downside stop stop loss down below yesterday's low. The specific numbers have been sent out to all of you premium members via Telegram. Remember, I do these trades during the normal market session, so that way you guys can consider the trades for yourself before all the rest of the folks hear about it in the free YouTube video later that night. So that's what I had for you here tonight. I hope you got some value out of the analysis. Key takeaways are, yes, we had another strong day in the S&P 500, but there's more than meets the eye. We did have a little bit more turbulence underneath the hood here tonight. Breadth wasn't particularly good. We see a lot of long upper shadows out there, and we have a lot of companies that are starting to sputter with their earnings announcements after hours here today. So be a little bit more careful on the bullish side of the equation out there. Remember, David will be back tomorrow, so we'll all look forward to hearing from him hopefully in this video tomorrow night as well. So if you got value out of this video, do me one favor, click like for me there on Twitter. As long as we get enough participation on that count, I'll plan on being back with you on Thursday as well. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.